impact of COVID-19 on the hospitality industry. We're happy to have Ann Hambly, founder and CEO of First Service Solutions. In today's webinar, Ann will have the answers to all these questions from CMBS expert points, such as what kind of COVID relief are CMBS owners getting on their hotel loans? How are current loans to value ratios impacting approvals, if at all? And for current borrowers, how has the timeline changed and what can they expect if their CMBS loan matures in 2021? Before handing this over to Ann, please take noting of the following disclaimer for all those listening to this presentation. There will be a Q&A available at the end of the presentation for any questions you may have. Please type them in the question section. Take advantage of this opportunity to ask what is on your mind and don't be shy, but please know we may not get through all questions during our time. Also, we will make today's presentation available for all within 24 hours on our COVID-19 research page. We're all excited to have you here today. So with no further delay, I welcome Ann to begin.
Hi there. Thank you very much, Kristen, for introducing me. I just wanted to, for those of you who have not heard of our firm or that I have not spoken to in the past, I spent 35 years of my career in servicing shops and ran a lot of the large ones. And I created First Service Solutions in 2005, and I specifically to help owners with CMBS debt. We have, as a firm at First Service Solutions, obtained COVID relief on about 500 hotels right now. So what I'm going to share with you too, not to recap already what's been introduced, but I'm going to take you on a little bit of a timeline through what's happened here, what kind of relief we're seeing, how servicers in CMBS are viewing COVID relief. And I'm going to start back in March. And it's interesting when I go back and look at this myself, it's amazing to think how we felt in March. In March, when we first, had all the shutdowns occur, I remember talking to many owners and having us discuss maybe 90-day relief. And I thought, wow, that's a long time. I mean, we're not going to need 90 days. I think I was thinking it was a week or two. Schools were closed, but all predictions then were that they were going to reopen shortly and everything would be back on track for 2020. Borrowers were calling banks for bank loans and getting a quick 90-day relief on their loans for the most part. And I think there was a lot of hope at that point and belief that we'd all be back to pre-COVID by early summer. And so we started down this road on CMBS debt of trying to help owners get the same kind of 90-day relief. Well, first thing in CMBS loans is it's the special servicer who has to grant the relief, not the master servicer. And I won't wade this deep into the process of CMBS, but I'm happy to talk to any of you after and go through this if helpful. The bottom line is you had to get transferred to the special servicer. I had a number of hotel owners who just missed their April payment because, your hotel was closed, no income coming in. So borrowers started defaulting, and imminent default letters were being sent in mass quantities to the CMBS servicer to try to get loans transferred to the party that can grant the relief. About, shortly after all of this, the CARES Act was rolled out, but for the most part, it didn't work for CMBS debt because you can't add any debt on CMBS. So you couldn't take advantage of the EIDL, the Main Street Lending Act. PPP is approved by servicers for the most part, but it has to be approved. So there was really nothing an owner could go get from the government to help during this process with the CMBS loan. So here we are now in April. We can kind of fast forward through April, but April a blur, but banks continued to offer relief. No relief yet for CMBS loans because we're still waiting, mind you, for them to be transferred to special servicing. So in mid-April, the IRS released some COVID relief guidance for CMBS. And again, I don't want to get too deep in the weeds on CMBS debt, but I will tell you one thing that's super important. CMBS loans, most owners don't necessarily know this, but they are in an IRS, Internal Revenue Service structure. It's called a REMIC. And the reason you need to be in a REMIC for this to work is every dollar you as an owner pay, they want that same owner to go through to the ultimate lender or the bondholders. So a CMBS loan can't be taxed at the entity level. All that, you're probably thinking, I don't care about all that, and you don't. But the point is, the fact that the IRS issued new guidance meant that the master servicer could now potentially grant some relief. That was a huge event for CMBS. Now, what that meant then is, as all new guidance is issued, there's always, how do you interpret it? What does it really mean? How do I implement it? So servicers all started scrambling and trying to figure out, okay, now what does that really mean? What do I do? In the meantime, this shows you how many loans are transferred to special servicing. And so this is April, you'll see almost 186 loans were transferred. Compare that to January and most of 2019, where the average amount of loans transferred to special servicer in a month was about 15 to 20. So you now had of these servicers getting 186 loans just for that month being transferred. So now we're in May, all right? Remember, the industry now had, the IRS had eased the regulations. The servicers now huddled and decided, okay, we now as a master servicer can grant some relief. And this industry created a standard package that had to be filled out. Some of you may remember it. It was very, very bulky, contained a lot of information, but it was what it was. And you had to fill all that out, send it into the master servicer, and now the master servicer could grant some relief. So that emerged, that caused the type 1 COVID relief to emerge. Type 1 COVID relief, and there are 3 types I'll talk about today. But the type 1 was where, as a owner of commercial real estate, you have a CMBS loan. If you have enough money in your reserve account held by the lender, you can use up to 3 months of your payment from the reserve account. You can use that money to pay the payment. So the loan remains current, but you're using reserves to keep the loan current. And again, it only works for loans where there's money in reserves. And again, as in all CMBS COVID relief, all the money had to be paid back. So the money was, you're just temporarily using it. You're going to have to pay it back. And the fees for this kind of type 1 COVID relief was in the range of 10 to 20,000. So not horribly painful. Back in April and May, remember, we kind of thought 90 days might work. Here we are now in that same, we're in June now at this point in my slides. And in June, there was 391 loans transferred. So now you've got almost 1,000 loans in front of special servicers for COVID relief. Let's think about what the world looked like in June, right? So a couple things. One is loans were just now getting transferred to the special servicer, which is where you have to be to get relief. So unless you were doing that type 1 COVID relief, and then you could stay in master servicing, use reserves for 3 payments. But other than that, you had to get transferred to the special servicer, and loans were just now getting transferred. So you had a lockdown in March. You're an owner, you missed your April payment, missed your May payment, missed your June payment. You're starting to get really, really, really nervous. A lot of people, I know, a lot of hotel owners had never been in this situation before, never missed payments. Scary, scary, horribly unfamiliar territory. Now, at this exact same time, a new special servicer called Argentic opened shop. And so if you had started the process with another special servicer, Argentic opened shop, and now your loan got transferred from that special to Argentic, and you kind of had to start over. So it added a little bit added delay, a little bit of frustration. Now, the first thing a special servicer asks an owner is, okay, give me your projections. How long do you need relief? When do you think the property will recover? And when can you pay me back, right? So that's the very first thing that was a sort of a disconnect or a reality check for owners is how can I possibly do projections on a property when I have no idea when it's going to open? Some of you have hotels shut down by government mandate. I mean, you don't know this. So we have the first big disconnect in getting relief from a CMBS special servicer, and that is who knows what the future holds. And in fairness, a servicer kind of has to have that in order to grant the relief. So there's no standard still. Each special servicer can do what they feel is appropriate. There was really no standard in this industry, but we started seeing a little bit of common themes. And the common theme was what I'm going to call a type 2 COVID relief. Now, again, this has to be granted by the special servicer, but the type 2 COVID relief looks something like this. And it's not a package where you call in, tell your special servicer you want package 2, and this is what you get. But these are just kind of the themes of what we saw, which is you defer about 6 months of payments. It's loans, again, that are in special servicing, and you got to pay the money back, all like before. The fees, weren't so standard. So it's $20,000 to maybe half a point of your balance, 0.5% of your balance. So now let's assume you didn't make your April, May, June, July, August, September. So your first monthly payment back to normal terms in this relief would have been October. At the time, back in, May and June, we thought, well, that's probably about right. Of course, here we are now, and some of us still have closed hotels. So now I'm in July. So you're in July, you're an owner with CMBS debt, and you've likely still not gotten any relief. 25% of hotels by this point are in special servicing. It's a bigger number now. So a big chunk of hotels are in special servicing. Special servicers, in fairness to them, they're inundated. They have never seen this volume ever before. They're not staffed for it. Plus, they all got impacted by COVID also. So a lot of them are working from home, not as efficient as normal. There's a lot of new staff being added to these companies to help with the volume. And so it's frustrating all the way around. I can tell you from working with owners that borrower frustration at this point was at an all-time high. It maybe got a little higher, but I think at some point people settled into the reality that this is not a quick fix. But at this point, borrowers were frustrated beyond belief because there was no relief yet. You're in this uncharted territory. Default interest is accruing on your loans. And some fees that were being quoted by the servicers for some relief was a whole percent. A $10 million loan, if I'm doing the math right, it's a $100,000 fee for 6-month deferral. I mean, it starts not making sense. This won't be all depressing. I'm just going through a lot of the facts first. Okay, loans transferred to special servicing by about this time in July. You can see that, as you all very well know, the bulk of the loans transferred are hospitality. Second largest property type affected is retail. That's not new news for anybody. So now let's go to August. Okay, so the HOPE Act was introduced. HOPE Act is the only government relief that'll work for CMBS debt, the only government relief that works for CMBS debt. PPP, of course, if you got it approved, was a nice Band-Aid, but the HOPE Act would, if it's approved, grant an owner access to 10% of their balance of the loan in equity, not debt. So it has the ability to work in CMBS. It was created really to help the CMBS debt structure. It is still in Congress. It is not approved yet. I held out a lot of hope, I don't mean to make that a pun, for the HOPE Act in August, September. I was instrumental in working with AAHOA and other trade associations to help push this through. My hope has dwindled a little bit given that we're now in the middle of December and we still don't have it approved. but it is still out there. By this point, short-term payment deferrals were approved, and in some cases where there was a large fee, some borrowers started doing a cost analysis on the relief granted and said, you know, it's not even really worth it. I'm better off coming out of pocket and bringing my loan current and, you know, calling it a day and not even taking the relief. So that I'm going to go to I'm going to skip the next point, but some special servicers, one in particular, at that point started saying, okay, you can bring the loan current, but we still want some fees. So it still was not a wonderful solution here, and default rates are at an all-time high. So I started thinking, before I go into type 3 relief, at that point, what did we know for sure? Into the summer, we're not in fall yet. What do we know for sure at that point? We know for sure that the future is uncertain. We know the default rates are higher than ever. We know that hotels at this point, I mean, all predictions are that you know, there's you guys know this better than I do, but a multi-year recovery. Some states you're hearing as long as 5 years. I mean, this is a long-term recovery. You get knocked off a cliff overnight, and then it takes, you know, 5 years to recover. That is hard, preaching to the choir, obviously, and all of you. Type 3 COVID relief emerged, and that's where most of the effort is going on right now. Type 3 COVID relief is really what you need, honestly, in hotels. And that's a little bit longer modification of your loan terms. So it could look something like no payment on your loan, deferral of your payment for 2020, all of 2020, and then maybe a slightly reduced payment in 2021, and the fees, again, 0.5 point to a point of your balance. These are all heavily negotiated and individually negotiated. There are very few themes yet, but I will tell you that servicers don't want to give relief into 2022. So if you have a hotel and you already are convinced in your own mind that the recovery for that hotel will take 5 years, I can tell you there will be a gap between the relief you need and what you get granted in CMBS. So you have to know that you can go back later potentially and ask again. We've got plenty of borrowers on their second round of relief. Got 6 months to start with. That came and went. Here I am, same position. I now need more relief. And servicers do appear to be open and amenable to hearing borrowers that go for the second round of relief. So what should you do if you own a hotel? And I assume you wouldn't be on this webinar if you didn't. So you own a hotel, you have CMBS debt. Before you jump in and try to get something done, first of all, know who you're negotiating with. You're negotiating with a controlling class party representative on a CMBS pool that is governed by IRS regulations and also governed by the Securities and Exchange Commission. These are not bank loans. They do not work like bank loans, and it's not a friendly banker you can pick up the phone with and call. So you have to understand, unfortunately, the CMBS structure, or you have to hire an advisor, of course, to help you. But a lot of borrowers have had a very, very horribly rude awakening on this stark difference between CMBS debt and bank debt, all due to COVID. Another thing you got to do is you got to get out a crystal ball and do your best guess at what the future might look like. You don't want your lender or the servicer to apply their opinion of future. You need to be able to come up with some realistic best guess sort of future projections. I don't know how you do it. I think the hardest jobs in the world right now would be an appraiser and probably someone trying to project the future on these kind of loans. You got to buckle up for a wild ride. And with that, I'm just going to leave my contact information up while we take questions. I assume you've maybe been typing questions in along the way. I have another I'd rather keep my picture off there, so there's contact information also. If I can hand it back, Kristen, to you to take the questions, I'd be happy to try to answer them.
Sure, yes, we had some questions come in, so let's get started right away. This question says, and thank you for providing such great information. It seems that a lot of the markets have bounced back, but not CMBS. Do you know why?
A lot of the markets have bounced back, meaning probably the debt markets. I'm going to assume that's the question. If I'm a banker, and I probably have my own opinion as a bank or a debt provider on what the future looks like, and I can take my own chances because it's my own money. And I think we all would agree that if you have a loan or property that was performing pre-COVID, it's not a matter of if it comes back, it's just a matter of when. So I could take a calculated estimation of when, and I could probably create a loan for that. If it's CMBS, I've got to sell this on Wall Street to a bunch of bondholders that need a sure, predictable income stream. And it's much harder to sell bonds and convince people to take a risk if they're not in the business of loaning, being a lender. And I think that's the difference. So CMBS relies on stability in the market, assurance of a certain future. I mean, all the things that don't exist today. So I believe that's the answer. If I've missed the question, obviously type the question in again for me, please.
No, I think that answers it very well. Our next question says, do you think Congress will work to make CMBS lenders work with hotel owners or provide some kind of relief?
I sure hope so. The relief that, again, we have in front of Congress that I remain hopeful that they'll entertain is the HOPE Act. And again, that is the best. It's not just for hotels, but it sure works really well. So if you have, again, a $10 million loan, you can get up to $1 million in equity with some, it kind of feels like debt because you do pay it back over time. But it's something that can work on a CMBS structure. So it'd be a tremendous relief for owners. That's the only governmental assistance that I'm aware of. I don't think there will ever be, in fact, there can't be really new rules rolled out that to make a lender anywhere give relief. So I don't think we're ever going to see that. But our best hope, again, sorry for the pun, is this HOPE Act. Back to the question. Yep.
Another question says, at what point at what point, I think they meant, at what point will the CMBS try to take over the hotel in case of not getting any relief from them?
Yeah. Okay. Well, that's the billion-dollar question of the day. For the most part, so let me take us back for a minute. I think it's a super important thing to contrast. In 2008, in the downturn of 2008, mostly owners were in front of special servicers then because of a problem with their loan. There was too much debt on the property. There was something wrong with the property. It wasn't a good property with lots of equity, or you wouldn't have been in front of the special servicer. COVID hits, and now here we are, we're in front of the special servicer with otherwise really performing assets and sometimes a lot of equity in the deal and a lot at stake. So the fear for every borrower that has CMBS debt is, ooh, are they going to be looking to take my asset? I can tell you across the board that is not their MO. They are not I'm not saying they can't or will never, but we are not seeing servicers foreclose on assets. For the most part, they are either trying to get the owner to cover the debt, the shortfalls themselves, where you got a wealthy sponsor, where you made a lot of money, where they feel like they can push the owner to, I'm going to use the expression, to suck it up. That's what they first try. But otherwise, they probably will give some relief for the most part before they would ever resort to trying to take a property. So we're not seeing foreclosures. I hope that answers the question. That's the best way I can answer that question. And I think that is
Yes.
good news, by the way. Yeah.
So speaking of foreclosures, the next question underneath it says, so this means no foreclosures. We are safe until 2022 or 2021. Will there be a loan forgiveness?
Well, there's no loan forgiveness. Everything's deferred, has to be paid back. I am not saying there are no foreclosures through 2021. I am not saying that. Unless you get relief, documented relief from your special servicer, they have the ability to foreclose if you're in special servicing and not making your payment. So don't sit back from this call and say, oh, okay, well, I'm all good now till 21. I'm just telling you the general types of relief we're seeing don't go past year in 2021. So I hope that answered that question better too.
Yes. Our next question is, have you seen the servicer allow hotel owners to refi and get out of the loan without defiance?
Defeasance. That's actually a question I probably get about 10 times a day. That is the very first thing an owner thinks is, okay, well, let me go see if I can get new money. I'll pay them off. Everybody should be happy. But remember, let's say that you were the investor. It's a $10 million loan again. I use those round numbers because it's easy. You invested $10 million in this CMBS structure. So you are owed $10 million. You have been assured that you've got a certain return on that $10 million through year 2028. I don't know, making up a number, right? And perfectly performing hotel, everything looks good. It'll be back to fully performing some point in the future. COVID hits and you pass through some kind of disruption to that cash flow to me. You pass through a loss. Nobody would appreciate that. So for all those reasons, the quick answer is no relief on defeasance, no debt relief. There's no reduction in the total amount owed on an otherwise performing loan pre-COVID. This is a short-term issue. I don't know if it means 6 months, 9 months, 12 months, 5 years, right? But there is a beginning and an end of COVID. We all believe, at least at this point. And so there will be no debt reduction as a result of it for CMBS.
Okay. The next question says, are you seeing forced deleveraging?
No, well, for the exact same reason I was mentioning that they cannot and will not take a defeasance waiver. They won't waive defeasance. The good and bad news about CMBS loans is they're locked out from prepayment. So just like I said, you can't get out of it early. You can't waive defeasance and get out early. You can't pay it down early either. And even if you wanted to, even if you said, hey, special servicer, I'll take this $10 million loan, I'll put $1 million on it. Now I only own $9 million. Believe it or not, that would very likely be rejected. And I've had this conversation yesterday with a large hotel owner, and it's like it doesn't make any sense, and it doesn't from a logic standpoint, but when you understand the CMBS debt structure, it does make sense. So you can't pay it down either. So no, they're never asking for deleverage.
Okay. We have a couple more.
Okay.
This one says, and thank you for providing this in such simple terms. At the beginning, you stated you can't have a CMBS and something else, but I missed that part. Can you repeat that?
Well, I don't. Oh boy, I wish I could remember. I don't know where that was in the presentation. Sorry.
It's okay.
Yeah.
We record this and we will send the recording out tomorrow for everyone that registered. So it will be in your recording since you said it in the beginning. So you can see it there for the person who asked that question. The next to almost the last question says, if you have been impacted by COVID-19, can your CMBS loan be restructured?
Yeah, that's the type 3 COVID relief that we went through on this presentation. That is the restructuring of your CMBS loan. So that is what that is. Will the if you have a perfectly performing asset pre-COVID, and now you're looking to get some restructuring of your debt, it's going to be in the form of COVID relief. It will not be permanent relief on your loan. It's going to be some kind of COVID relief.
Great. And this is the last question. And it says, staying out of the political spectrum, what do you think is holding up the HOPE bill? We are hearing that they have to come up with something before the year ends.
Yeah, I wish I knew. I do not know. I think, at the time that it was introduced to Congress was going from memory, but it was in the summer. There was all the, I think the impeachment stuff was all going on right around that. There was a lot of distraction in other fronts. And I just don't know that it ever rose to the level of being seen as so urgent. I also will say that, in fairness to everybody in Congress, the commercial real estate debt market is like $3 trillion. CMBS is about 500 billion of that 3 trillion. They have to solve for the 80% of the bigger problem, not the smaller 20%. So that's what we kind of all do. So there have been a lot of relief programs that work for commercial real estate. It's just that when you're sitting in Congress, likely you don't know the detailed structure of a CMBS loan. You would never want to know that unless you worked in the business. So that's the problem, is they think the relief they rolled out does work, and you have to sit and explain law in a lengthy detail about why it doesn't, and you look for something different. Anyway, it's just stuck there. I wish I understood it better. There's a lot of people who have spent a lot of time trying to figure out how to get them to focus on this, including heads of a lot of trade associations, including AAHOA, and it's not for lack of trying. I just don't think it's gotten the attention it deserves.
All right, great. And this isn't really a question, but we'll end on this note. And they said, thank you so much for this important webinar, Anne. And I would also like to say thank you again, along with First Service Solutions, for this informative webinar. Everyone that joined us today, feel free to check out our events calendar and AAHOA's website for future webinars, and also in our resource library for past webinars we have done. We hope you have a wonderful day, everyone, a wonderful weekend, and a wonderful holiday. And hope you join us for future webinars in 2021 and AAHOA events. Again, thank you, and this is our last webinar of the year, and it's been probably very helpful to our members. Thank you. It's been a pleasure.
Thank you. My pleasure. Thank you very much for including me.
You're welcome. Have a good one.
You too.